Somewhere right now, a guy with $500 and an investing app is one decision away from a portfolio worth millions. And somewhere else, a guy with a $2 million portfolio is one bad trade away from losing it all. The difference isn't luck. It's which investing level they're standing on. And most people? They don't even know the levels exist. Here's the thing nobody tells you about investing. You don't go from your first $500 investment to a real portfolio in one jump. You climb, level by level, like a game you didn't know you were playing. And the wild part, most people are stuck on investing level 1 their entire life. Not because they're lazy. Not because they're bad with money. Because nobody ever showed them what each level actually requires. So today, we're walking through all 8 levels of investing. From your first $500 to a $1 billion portfolio. By the end, you'll know exactly which level you're investing at right now. And more importantly, the exact mistake keeping you from the next one. Stick around, because level 5 is where most investors quietly blow themselves up, and almost nobody sees it coming. Level 1, Investment Readiness, $0 to $500. At this level, there's no investing goal. There's just survival. It's rent. It's gas. It's making sure the card doesn't get declined at checkout. You're not thinking about the stock market. You're thinking about Tuesday. And here's the part that stings, this is where most Americans actually live. Paycheck to paycheck. Not because they don't earn money. Because the money disappears before it ever reaches an investing account. The mistake at this level isn't a bad stock pick. It's trying to invest at all before the leaks are fixed. The next step has nothing to do with the market. It's tracking where your money actually goes, because you can't invest money you can't locate. Level 2, the Protector, $500 to $2,000. The goal here isn't growth yet. It's protection. You're building your first cushion, your oh no fund, so a single bad month can't wipe out any future investment. Car breaks down? You don't touch your investments. Medical bill shows up? You don't touch your investments. Sounds small. It's not. The mistake almost everyone makes here is skipping straight to investing apps, crypto, stock picks, trying to grow money before they've protected it. And that's exactly how people lose the little they have. Not because the investment was bad. Because they had no buffer underneath it when life happened, and they were forced to sell at the worst possible moment. The next step is simple, finish the cushion before you open a single new position. Level 3, the Foundation Builder, $2,000 to $10,000. Now the investing goal shifts. You're not picking stocks yet, you're building the foundation that lets you invest without panic later. 3 to 6 months of expenses, sitting safely, untouched. This is boring. Nobody makes a TikTok bragging about their emergency fund. But the mistake at this level is investing money you'll need in 6 months. Markets drop. If that drop happens right when you need cash, you're forced to sell at a loss. The next step, once the foundation is solid, your first real investing decisions become almost stress-free, because you're never investing money you can't afford to lose short-term. Level 4 are the first investor, $10,000 to $50,000. This is where real investing begins. The goal here is simple, consistency, not returns. Index funds. Retirement accounts. Maybe your employer match, which, by the way, is free investing money most people leave on the table. The mistake at this level is impatience. People check their portfolio daily, get bored by slow growth, and jump into something exciting instead. You put in money. Nothing dramatic happens. No fireworks. Just numbers, quietly compounding in the background. That sounds boring, until you see what happens next. If you're still watching, this next part changes everything. Level 5, the Momentum Investor, $50,000 to $250,000. Here's where compounding stops being a boring math term and starts becoming visible in your investing account. Your portfolio starts making more in a good month than you contribute in a good month. This is the level where investors start to feel it. Where investing starts feeling less like a chore and more like a machine that's finally running. But this is also exactly where most investors get overconfident. They start checking daily. They start believing they've figured out the market. And here's the twist most investors never see coming. For years, you thought the goal was picking better investments. But the truth is, the real problem was never your stock picks. It was your relationship with risk. Some investors hit level 5 and freeze. Too scared to invest further, so they stay in cash, watching inflation quietly erode gains they already earned. Others hit level 5 and get reckless. Chasing the next hot stock, the next sure thing, because now they finally have real money invested, and greed convinces them to gamble it. Both mistakes come from the same place. Nobody ever taught them how to invest calmly with real money on the line. The mistake underneath every mistake at this level is emotional, not strategic. Staying calm, not being smarter, is what actually separates the investing levels above this one from everyone stuck below it. Level 6, the diversified investor, $250,000 to $1 million. The investing goal changes again here. It's no longer just grow the portfolio. It's don't let one bad investment take the whole thing down. Real estate. Multiple account types. Maybe a business investment. The mistake at this level is staying concentrated in one asset out of overconfidence, the same overconfidence that built the portfolio in the first place. The next step is deliberate diversification. You stop asking what's the best investment right now. And you start asking, what happens to my portfolio if this specific investment goes to zero? That question changes every investing decision from here forward. Level 7, the wealth protection investor, $1 million to $100 million. At this level, the investing game changes completely. It's not about picking the right stock anymore. The goal shifts to tax-efficient investing, estate structures, and trusts, protecting investment gains across decades. The mistake here is continuing to invest like a beginner, chasing returns, instead of investing like someone with something real to lose. Most people fantasize about reaching this level. Almost nobody prepares for what the investing actually requires here, a patience, and letting quiet, unglamorous decisions compound for 20 or 30 years. Level 8, the generational investor, $100 million to $1 billion plus. This final investing level almost nobody reaches. And honestly, that's not really the point of this video. Because here's what's fascinating. The investing habits that get someone to level 8 are the exact same habits that get a beginner from level 1 to level 4. Consistency. Patience. Not panicking. Not gambling. The account balances just get bigger. The investing tools get more complex. But the underlying discipline stays exactly the same calm, steady approach that started with a first $500 contribution. So here's the real question. Not what should I invest in? But which investing level are you actually standing on right now? Because once you know that, the next investing decision isn't complicated. If you're on level 1 or 2, build your financial foundation before investing. If you're on level 3 or 4, stay boring. Let consistent investing do the work nobody sees. Investing was never really about picking the right stock. It was always about becoming the kind of investor who could hold on long enough to let it work.